Hey everyone, a very good evening to all of you guys. Very good evening to all of you. Welcome to the Finance Current Affairs session. Good evening Sureka, good evening Bhakti. Okay guys, let's quickly start the discussion. Very good evening to all of you. Good evening Ankita. Let's start the discussion now. So guys, for the PDF related to this session, you can definitely download the Oliveboard application, plus you can join the Telegram channel of Oliveboard as well, right? Plus you can join my Telegram group as well. CA Prateek Finance. If you type CA Prateek Finance on your Telegram, you will get my group link. You can definitely ask me any kind of query on this particular group. Plus I frequently share finance related content as well on this group, right? A very good evening everyone. Good evening. Welcome to the class. The very first news for today related to finance current affairs is Sri Lanka to launch UPI payment acceptance for the Indian tourist, right? So this is a kind of internationalization of digital payment, right? Internationalization of digital payment. Now India is aggressively trying to internationalize the digital payment methods that we are having, and UPI is the best method through which we can achieve that. And in Project Nexus as well, we have tied up with so many countries. We have done partnership related to UPI payment with so many countries, and recently Sri Lanka is going to launch a UPI payment acceptance for the Indian tourists. So now Indian tourists, those who are actually traveling to Sri Lanka, they can definitely make the UPI payments as well in Sri Lanka, right? So via your Google Pay application, via your Phone Pay application, you can easily make the transactions, right? Even in Sri Lanka. So that's, I will say, an amazing facility. And in India we are having so much of tourism, especially tourists that are traveling to Sri Lanka. So it will definitely be a great initiative of Reserve Bank of India. So this initiative is part of India's broader strategy to internationalize its digital payment. The very first thing is we want to internationalize our digital payments infrastructure and strengthen the cross-border payment connectivity. Now it's a huge problem. So recently I have also traveled to a foreign country, but the problem is first you have to get the currency converted into the US dollars, and then you will be converting that into the respective currency of that country, right? Because if you directly convert INR into that currency of the country where you are actually going, it will be a mess. Why? Because of the forex charges. Now in India we are having good amount of forex charges, plus outside India also so many commissions are being charged on this forex translation charges, right? So it is better to directly make the UPI payments in countries like Sri Lanka, right? With other countries also we have entered into such a kind of agreement. So Indian tourists now visiting Sri Lanka will be able to make payment using the UPI enabled mobile application. So in Sri Lanka we are having Lanka QR. Okay, we are having Lanka QR. So you can just scan this Lanka QR from your Google Pay, Phone Pay, and you can make the payment, right? The institution involved in this arrangement is none other than NPCI International Payment Limited. Now what is NIPL? NPCI International Payment Limited is nothing but an international arm of our NPCI only, the organization behind the UPI payment. So this is an international arm of the NPCI only, right? They have partnered with Lanka Pay. Lanka Pay is Sri Lanka's national payment network. Just like we are having UPI, right? The company behind UPI is NPCI. Just like that, in Sri Lanka we are having Lanka Pay. So they both have partnership. They have done a partnership agreement, right? And we can just easily make the UPI payments now in Sri Lanka as well, right? Good evening everyone, good evening, welcome to the class. Okay, next one. Edelweiss AMC launches India's first passive hybrid mutual fund, NFO. So let's first one by one understand the meaning of each and every terminology which is there, and then we are going to understand the news. So this is nothing but a mutual fund company. That's why we call it as AMC. What is the full form of AMC? Asset Management Company. So this is a company which is managing assets on my behalf. I don't want to directly invest in stocks. So what I can do is I can just invest in mutual funds. If I invest in mutual funds, now this AMC, this asset management company, will in turn invest money on my behalf in different stocks. It can be stocks, it can be other mutual funds, it can be debt funds as well, right? So here I can say that this particular scheme has launched India's first passive hybrid mutual fund. Now what do you mean by hybrid instruments? What do you mean by hybrid instruments? Mix of equity and debt, right? Mix of equity and debt, they can be called as a hybrid instrument. So what is the name of this fund? Nifty Large Mid Cap 250. So this is the equity portion of the fund, plus 8 to 13 year government security yield. So this is the debt part. This is the debt part of the fund. Why? Because this is government securities. These are the government securities. So this is the debt portion, right? And it is there in the ratio of 70:30. That means 70% equity will be there and 30% debt will be there, right? Equities are risky, debt is safe. Whereas I can earn more and more return on my equity shares, whereas I can earn fixed return on my debt, right? So it's a mix of equity plus debt, and this is India's first passive hybrid mutual fund. Sir, what do you mean by passive? What do you mean by active? Look, if I invest my money, I am an investor. If I invest my money into a AMC, now this AMC can be of two types. It can be active, it can be passive as well. Do you guys understand the meaning of active and passive? Anyone in the comment section? Would love to know from you guys as well. What is the meaning of active and passive? Any idea, guys? What is the meaning of active and passive? Actively managed by fund manager. Yes, that's correct. Passive means via someone else. Okay. Look, if my AMC, if my fund is an active fund, that means there is a fund manager as well. There is a fund manager as well, and this fund manager is buying and selling securities based on his or her own judgment. His or her own judgment, right? So somebody is actually there. Somebody is actually sitting, right? Buying stocks, selling stocks. But let's suppose if there is a passively managed fund, that means there is no fund manager in it. Why? Because this can be an index fund. This can be an index fund. Why? Because it is actually tracking an index. Say for example, Nifty 50. So if I invest in some mutual fund, which is an index fund, so no fund manager is there in it. Why? Because there is no need of having a fund manager, right? So 50 stocks are there in Nifty, and this fund is exactly tracking Nifty 50, right? So let's suppose some stocks are out of Nifty, then some stocks will have to be out of this fund as well. So can I say we are just replicating something? We are just copying as it is Nifty 50 or maybe Sensex, right? So this can be a passive fund. This can be a passive fund. Yes, yes, Devansh, right? That can be a case. Perfect, guys. So that's what the difference between active and passive is, and this is passive. Why? Because we have directly invested 30% in government security yielding instruments, right? Plus we have invested in a index Nifty large and mid cap 250, right? So this becomes a perfect example of a passive fund, and this is a hybrid instrument. Why it is a hybrid instrument? Guys, there is a combination of equity plus debt in it, right? Acha, what do you mean by NFO? Just like we are having IPO, initial public offer, a public company raising funds from public for the very first time, right? This is a kind of NFO, new fund offer. Whenever a fund is raising money from the public at large for the very first time, we call it as NFO, just like IPO. IPO is there for stocks. For mutual funds, we call it as NFO. For mutual funds, we call it as NFO. Acha, can you guys tell me, what do we call an IPO for cryptocurrencies? Let's suppose I'm launching my own cryptocurrency, Prateek coin, for example. Okay, for example, finance coin or Prateek coin. So what do we call it? What do we call it? Now I have told you when we were learning the regulatory sandbox of Reserve Bank of India. A new coin offer, no, that's not new coin offer. Yes, Yastika, initial coin offering, ICO. Yes, Devanshan Yastika, very good. ICO, it is called as ICO, initial coin offering. So let's suppose if this is an IPO for share market, right, stocks, then I can say it as initial public offer, IPO, right? If I'm launching a mutual fund for the very first time, I'm raising money from public, new fund offer, NFO. I'm launching a cryptocurrency, raising money from cryptocurrency for the very first time, initial coin offering, right? Initial coin offering. So don't get confused. Ultimately, we are raising money for different asset class. Stocks are different asset class. Mutual funds are different asset class, right? Cryptocurrencies is a separate asset class. So I hope this is clear, right? Not so important news, but the concepts which are there in the news are so important, right? So it's not always about finance, current affairs in finance. The very first thing in finance, current affairs is finance, right? Though I take the static portion in the paid class, in the regular paid class, but still I can say I frequently cover the static portion as well. Sometimes sometimes I teach in the static portion in the finance current affairs session as well, right? So sometimes news is not so important as the terminologies in that particular news, and I try to cover the terminology as well as the news, right? So this news is not having a, I will say, higher probability of coming in the examination, but the terms can definitely come, right? Please tell an example of NFO. So this is an example of NFO, guys. Edelweiss AMC, which is launching a first passive mutual fund. So let's suppose if I am launching my own mutual fund, right? Prateek Nifty 50 index fund. I'm launching it for the very first time and you guys are investing your money in it, right? I'm launching it for the very first time, then it will be called as a NFO, right? Amrit, is it clear? I'm launching my fund for the very first time. Just like I'm launching my share for the very first time, we call it as IPO. When I'm launching my mutual fund for the very first time, I'm raising money from the general public, that's called as a NFO, right? If it is a cryptocurrency, it will be called as a ICO, initial coin offering. It will be called as a initial coin offering. So I hope it is clear now to everyone, right? Okay guys, next news. Now this is regarding the SEBI board meeting. Perfect, Amrit, perfect. This is regarding the SEBI's board meeting, which was recently held, and some of the key decisions were taken in this particular meeting. Please do remember guys, doesn't matter whether you are preparing for RBI, SEBI, IFSCA, PFRDA or any other examination, right? You have to read the regulatory body specific news, especially SEBI, because most of the times the news that are there related to regulatory body, I will say 60 to 70% of the news relates to SEBI only, right? Because it's a very active organization. Plus the stock market interest is also increasing in India, right? So definitely I can say कि ये तो time की demand है कि SEBI has to be active. It has to be active. Okay guys, so this was the 213th meeting of Securities and Exchange Board of India. There were decisions and there were changes related to AIF, alternate investment funds, FPI, foreign portfolio investors, social impact funds, infrastructure investment company and real estate investment company. So at the end of today's session, I'll be also teaching you some concepts like what a real estate investment trust is, what is an infrastructure investment trust, right? So session के end तक बने रहिएगा. Definitely we are going to discuss about some of the important concepts as well related to your static portion. सही है? Yes guys, your new batch. I think I'm teaching in English only, right? Sometimes I use Hindi words which are not part of your course, right? So this will be 99.99% in English, but the concepts will be 100% in English, that I promise. Okay, the concepts will be 100% in English only. The concepts, the examples will be 100% in English only. The video that I'll be uploading tonight, sir, so I don't think there is any video which is going to be uploaded tonight. Okay, tomorrow definitely there will be video which I'm going to upload. Day after tomorrow also there will be a video which I'm going to upload. Plus, in case if some of the videos on the YouTube channel are there in Hindi, no worries at all. In the RBI circular series, whenever I will take the part first, part second of March 2026 month, you will be getting each and everything in that particular series in complete English, right? So you'll be able to understand it definitely from the RBI circular series also. Okay, guys. Yes, tomorrow a new batch is starting related to your static portion, right? So definitely I'm having the first class tomorrow related to finance. Okay, guys. So I was talking about SEBI board meeting. There were so many decisions. Some are important for your examination and rest of the decisions are just related to for the sake of knowledge purpose, right? So I'll be teaching you both and I'll be telling you which can be definitely asked in the examination and which is just for the knowledge sake. The very first thing, flexibility to the alternate investment funds in winding up and surrendering the registration. Let's suppose there is a AIF, alternate investment fund. There is a AIF, right? And the AIF is closing down the operation. The AIF is winding up the operation now, right? We are closing the business, but under current regulation, whenever an AIF is in the stage of winding up, they have to distribute all the liquidation proceeds. You have to liquidate all your assets, you have to settle your liabilities, and you have to pay whatever you are having in your business to your owners of the business, your equity shareholders, I can say, your investors. In case of AIF, investors will be there, right? So you have to distribute each and everything. No scope of keeping a penny in your pocket. You have to distribute each and everything. Definitely, if you are closing down your business, you have to distribute, right? But the problem is, if you have a nil bank balance, sometimes there is even a pending tax demand, maybe income tax demand is there, GST demand is there, or any other legal suit is there against the AIF, or any other operational expense which might come in some time, right? So in order to factor in that particular tax demand or litigation or any other expense, it has been decided by Securities and Exchange Board of India in the board meeting that AIF can retain certain proceeds, right? I can keep something in my pocket. If I am an AIF, I can keep something in my pocket if there is a tax litigation, tax demand, or any documented litigation which is still on in the court of law. But my 75% of the investors should agree for this retention provision, right? Not so important for your examination. Not so important for your examination. This was the update number 1 in the SEBI board meeting. So I'll be going with the sequence only. This is the first update. I don't think this is very relevant for your examination. It is of okayish importance. Okay, आ गया तो आ गया, नहीं आया तो नहीं आया. It's not that much important. This first one I am telling. Rest are the important. Okay. Inoperative fund category, you will be called as an inoperative fund. So that's fine. If you are having any kind of tax litigation or any other kind of litigation, if your investors are agreed, then you can definitely keep certain amount of money with you. That's fine, right? Or you think that if there is some kind of an operational expense, right, that you have to bear, then based on that also you can keep some money in your AIF. That is also fine. That is also fine, right? So this is the decision number 1. Flexibility related to alternate investment fund. Flexibility related to alternate investment fund. Yes, there was some other news as well related to AIF, right? So I can say AIF, PMS, right? Especially AIF is in news. I will say always in news most of the times. Next decision of SEBI is very important for your examination. very important for your examination. High chance that you will be getting one question from this particular news. Very high chance, right? Why? Because RBI loves to ask SEBI specific news, that you can see in the PYQ as well. Any PYQ you take in the past 3 years, 4 years, you will be always getting SEBI questions in your examination. Okay, high chances. And this will also be going to be a very high probability question related to net settlement of funds for the foreign portfolio investor. So say for example, I am a foreign portfolio investor. I am a FPI, foreign portfolio investor. So I'm living outside India. I love to invest my money in the Indian stock market. So let's suppose today I bought shares worth rupees 100 crore. I sold shares worth rupees, let's use some other color for this one. I sold shares worth rupees 100 crore, right? So I bought shares worth rupees 100 crore. I have also sold shares worth rupees 100 crore. So I can say on a net basis my position is 0, because if I am buying a share worth rupees 100 crore, I have to pay 100 crore. If I am buying something, I have to pay, right? But if I am selling something, then I have to receive money. So can I say that on a net basis my position will be 0? 100 crore minus 100 crore will be 0. But as per the current SEBI regulations, I have to pay 100 crore first. And then I have to receive 100 crore, right? Because if I am buying something, I have to pay for it. If I am selling something, whenever the transaction gets settled, right, on T plus or T plus whatever basis, T plus 1, T plus 2, right, on whatever basis, whenever the transaction is settled, I will be receiving that money. But if I am buying something, I have to pay completely for that. So can I say that as of now, I am following gross basis? Now we are shifting from gross basis to net basis. And SEBI has decided that let's shift to net basis, because it is creating trouble for the FPI. Even if I have bought something worth rupees 100 crore, I have sold something worth rupees 100 crore, there is no netting concept. Why? Because SEBI follows gross concept, right? So now you will be able to understand this particular news. So let's study the pointers. The current system is, the FPI currently settles the trade in the Indian stock market on gross basis, meaning purchases and sales must be settled separately. I have to separately pay 100 crore rupees and I have to separately receive 100 crore rupee, right? So this is the current system. But now the new system will be, SEBI will now allow net settlement of funds for overnight transaction in the cash market. So from now onwards, netting will be done and I don't have to pay anything if it is offsetting. Sir, you already taught this previously. Yes, I taught this in one of the draft circular, right? And I'm happy that you remember this news, right? I think it was in the RBI circular series, or maybe it can be in the finance current affairs series as well. But it was again in the news. Why? Because recently SEBI board meeting was there and they have implemented this provision now. They have implemented this provision from 31st December 2026. Earlier, it used to be a discussion, right? From SEBI side, it was a kind of discussion that I taught you, definitely you remember. But as of now, they have decided the implementation timeline as well. From 31st December 2026, we are going to implement it, right? So from the end of this calendar month, you can expect this news to be in effect, right guys? So that is the provision. I hope you are able to understand, and this can be super important for your examination. Please do mark it. You can get one question from this particular news. Third one is again important for your exam. This is the third update in the SEBI's board meeting. Again, very important. Okay. So I don't mark each and everything as important. That's not me. right? I always mark only those things which I personally feel that they are going to be important for your examination. Otherwise, it's not like that. If I'm not marking something as important, you don't have to study it. You have to study each and everything. I don't know what is going to come in your examination, right? Nobody knows what is going to come in your examination. That's the truth. But we can definitely have a prediction based on the probability, based on how the regulatory bodies are asking questions in the examination. We can always predict, and that's what I'm doing, right? So this is again going to be important, guys. Reduction in the minimum investment for social impact fund. Sir, what is a social impact fund? There are so many types of fund. Now, as the name says it all, you have to generate a return because you are a fund, but you should also impact some part of the society in a positive manner, right? So social impact funds invest in projects that generate measurable social benefits as well, along with the financial return, right? Financial return is definitely important. Financial return is definitely important, but not at the cost of society, right? But not at the cost of society. So somewhere or the other, if your fund is also generating return plus it is also benefiting the society as a whole, right? So what kind of funds it can be? It can be related to education. The fund may support education, healthcare, rural development, right? Environmental sustainability. So because this is social in nature, I can say that from ESG, there is a S in ESG. There is a S in ESG, right? S stands for social. Environmental, social, governance, right? So this is definitely ESG oriented. This is definitely ESG oriented, right? So the whole idea of SEBI is SEBI wants retail investors to participate in this kind of fund. SEBI wants everyone to participate in this kind of fund, and that's why they are reducing the ticket size. Earlier, you need at least 2 lakh rupees to invest in this kind of fund. This is the old limit. What is the new limit? Just 1000 rupees. Just 1000 rupees is the new limit. Important for your examination. Please do mark it. Can be super important for your upcoming RBI grade B examination or any other examination that you are giving, right? So this series is not just for the RBI grade B aspirants only. If you are RBI grade B aspirants, or if you are aiming for SEBI, PFRDA, IFAC or any other examination in which finance current affairs is there, then definitely this series is going to be important, right? So I hope this is clear, guys. This is clear. Earlier we used to pay 2 lakh rupees for buying this fund. Now we just have to pay 1000 rupees. So we can invest with as low as 1000 rupee. We can invest with as low as 1000 rupee, and you know that when the ticket size decreases, more and more people are interested in buying these kind of funds. So sorted. News number 3rd important. News number 2nd was also important, right? Ease of doing business measures for infrastructure investment fund and real estate investment trust. Can you guys tell me which is the regulatory body for infrastructure investment trust and which is the regulatory body for real estate investment trust? Any idea? Definitely SEBI is the regulatory body. That's why we are studying it here in the SEBI board meeting. Otherwise we will be studying these kind of stuff in the RBI related news. So both the funds are governed by Securities and Exchange Board of India, right? Both the funds are governed by Securities Exchange Board of India. Now let me tell you one interesting thing which can be important for your examination, which is not there in this particular news. That's an add-on thing, and we'll be having a separate discussion related to the real estate investment trust and infrastructure investment trust at the end of this session as well. But let me just tell you one interesting thing. We can say a particular asset class as a equity. We can also call it as debt. We can also call it as hybrid. Can you tell me infrastructure investment trust and real estate investment trust, where to classify this? In equity, in debt or in hybrid? And you can have this question, you can get this question in your examination in 2026. Very high chance. Very high chance. What do you think? Where I'll be classifying infrastructure investment trust and real estate investment trust? In equity, in debt or in hybrid? Or they are separate asset class? What do you think? Everyone in the comment section, guys, quickly. I need answers from all of you. So it's not a kind of pravachan that I am giving that you guys are coming to the class and सुन लेते हैं सर क्या बोल रहे हैं और फिर चले जाएंगे एक घंटे बाद, right? ऐसा मत करो. Try to interact with all the faculty members. That will definitely enhance your learning experience, right? Everyone in the comment section quickly. Hybrid. So many hybrid maybe. Any other opinion? Anyone? Any contradictory opinion? I personally love contradictory opinion. So finally we have it. So Pallavi is saying it is equity. So many students are saying hybrid and just Pallavi and Devansh are saying it is equity. Guys, both the answers are incorrect. Right? Real estate investment trust is classified as a equity category as per SEBI in the year 2025. Super important for your examination. And now equity oriented mutual funds can also invest in real estate investment trust, right? If you see a broad trend, I don't know whether you are investing money in capital market or not, or even if you are following the finance current affairs session, I'll tell you that nowadays the mutual funds that are investing in equity, let's suppose you bought a mutual fund worth rupees 1 lakh rupee, which is a equity oriented mutual fund. That means that mutual fund is investing in equity shares, right? Real estate investment trust is also now a part of equity instrument. So mutual fund companies can now pour money in real estate investment trust as well as an equity, but infrastructure investment trust still is a kind of hybrid instrument as per SEBI. Very important for your examination, a very high probability question that you can get this one in the examination in 2026, right? In which regulatory body examination, I don't know. Maybe it can be there in the RBI, maybe it can be there in SEBI, right? I am not making the paper, right? Plus I don't know what will come in the examination, but definitely in one regulatory or body examination in the year 2026, high probability that you will be getting this question. Okay, super important for your examination. Please mark this one, right? Okay guys, so this was not at all the news. This was a part of additional discussion that I was doing with all of you, right? So fourth news, ease of doing business for infrastructure investment trust and real estate investment trust. In the SEBI board meeting, SEBI approved certain operational changes in both the schemes. Both the schemes are governed by SEBI only, right? Holding SPV, what is SPV? Special Purpose Vehicle. After concession expiry, the infrastructure investment trust can now continue to hold SPVs, special purpose vehicles. As of now, just try to remember projects. So if I am a company, I am a INVIT, Infrastructure Investment Trust, I'll be having so many projects. Let's suppose highway number 1, highway number 2, highway number 3. All these are my SPVs, special purpose vehicles, right? Let's forget the technical jargons. Just remember project as of now for learning purpose. So I am having so many projects, I am having so many SPVs, right? Now even after the end of the agreement, still I can continue holding this SPV just for litigation purpose, just for regulatory approval purpose. What if someone files a legal case on that particular highway number 1? Now I can say in the court of law that as of now my agreement is ended. So I don't care about that highway anymore. But no, you own that SPV, you used to own that SPV, so you are also part of that litigation. So you will be continuing to hold that SPV even after the project concession agreement is ended. That's a clarification from the SEBI side. I don't think this will come in the examination. Hardly 10% chance, 5 to 10% chances there that it will be there in the examination. But this concept that I just taught you right now, this can come in the examination, right? I'm not sure about this one because this is not impacting, any part of your syllabus. I will say it is a secondary thing. So first learn this one that I have written in the upper right hand side of your screen. Then once you are done with rest of the stuff, related to today's session, then you can definitely learn this fourth wala news as well. Otherwise, not so important as per my understanding, right? Investment of surplus fund. If you are having some surplus fund, the infrastructure investment and real estate investment trust can definitely invest the temporary surplus fund in liquid mutual funds. Important. As an INVIT or REIT, you can invest your money in liquid funds. What are liquid funds? That can be easily liquidated. As the name says it all, you can easily liquidate it, right? You can easily liquidate this one. But these funds should be having credit risk value of at least 10 and must be having a rating of AA and above that. So you can't invest in any asset class. You can only invest in liquid mutual funds, and that too the credit risk value should be at least 10, rating should be at least AA or above AA. Important. If you are a privately listed infrastructure investment trust, you are free to invest up to 10% of your asset value. Let's suppose your asset value is 500 crore. Then you are free to invest 10% of it. That means 500 crore ka 10%, that means 50 crore in the greenfield infrastructure project. Sir, what do you mean by greenfield infrastructure project? New infrastructure development built from the scratch, right? That means new highway, new metro system or renewable power plant, which is new. That's called as a greenfield project, right? If you are a privately listed INVIT, then you can invest up to 10% of your asset value in greenfield infrastructure project. That is a new update which is confirmed in the SEBI's board meeting. So just try to remember the numbers. The first priority we have to always give to the numbers. Then the second priority, have you understood the concept? Because if you are not getting the concept, then it will be very difficult for you to remember the numbers, right? So guys, this is the case and borrowing flexibility for INVIT, Infrastructure Investment Trust. Infrastructure Investment Trust with leverage between 49% and 70% will now be allowed to take new borrowings for capital expenditure. If you want to make capital expenditure, then definitely it is allowed to you. But your leverage should be between 49% to 70%, not more than that, not less than that, right? Any kind of major maintenance, any kind of refinancing of existing debt, right? Acha, for privately listed INVIT, because it is privately listed, and that's why some additional restrictions apply. Right, Subhashish? So because this is a privately listed INVIT, public money is not involved in it, right? That's why there is a capping related to the greenfield infrastructure project. Had it been public INVIT, then this particular cap is not applicable. Right? So the most important amendments from this particular SEBI board meeting, as per my understanding, is the very first thing is net settlement. A very high probability question is expected, right? A very high probability question is expected from this net settlement. Earlier we used to follow gross, now we will be following the net basis, right? Then the second one will be reduction of minimum investment in social impact funds. Now SEBI and RBI loves to ask these kind of questions, right? Specifically, it is a limit based question. It is related to social impact. It is related to financial instrument, touching each and every part of your syllabus, right? So this again is important for your examination. The concept of which one is equity instrument, which one is a hybrid instrument, this is super important for your examination, right? Okay guys, so there was one more update related to SEBI. Let me just teach you that as well. In the board meeting, they have decided to enhance the conflict of interest reforms for SEBI officials. So if you guys remember, who was the ex SEBI chief? As of now, we are having Pandey Saab. Who was the previous SEBI chief? Any idea? Yes. Ma'am was there? Perfect. Devansh, that is the correct choice. There was a conflict of interest case, if you guys remember. I don't know whether you remember or not. I think it is back then in 2024 maybe. Somewhere or the other, Hindenburg claimed that SEBI chief is somewhere or the other related to Adani investments. There were some offshore investments of MAM in enterprise of Adani, which was indirectly in the control of Mr. Adani, right? So some conflict of interest situation was there, and that's why SEBI is quite concerned, and they have also formed a high level committee on conflict of interest. Sir, what is the meaning of this news? If I am a SEBI officer, then I can't have a conflict of interest. That means if I am investing anything in stock market, in debt market, or in any other financial instrument, I have to disclose it. Plus, if it is not allowed, then I have to sell it, right? I have to sell it. So now investment restriction for SEBI leadership is also applicable. SEBI chairman and whole time members will face the same investment restriction as the SEBI employees. There is no difference now. Earlier limit difference used to be there. As of now, no limit difference will be there. You have to face the same restrictions as applicable on the SEBI employee. Doesn't matter if you are the chairman, doesn't matter if you are the whole time member, right? All are equal in the eyes of law, right? Insider definition expanded. They have considered SEBI chairman and whole time members also in the definition of insiders under the insider trading rules, right? So definitely now the scope of, I will say, coverage has enhanced in terms of conflict of interest, which is a good thing, which is always a good thing, right? So these are the summary pointers, guys. I have seen this news on Instagram on Money Control channel, so I have just pasted the screenshot for all of you, right? You can just have a quick look in a summarized manner. वैसे तो we'll be doing the MCQs as well on finance current affairs. There I'll be covering each and everything in a summarized manner in MCQ format, right? So once you are done with the news, with the finance current affairs session 1 or 2 times, then you can directly pick the MCQ sessions. That will also work. You can directly watch the MCQ sessions, right? Or you can directly watch the compilation session also. That will also work. If you are watching all the sessions, then definitely it will be a better learning experience. Why? Because your knowledge is getting compounded day by day, right? Your knowledge is getting compounded day by day. So I personally prefer that you guys watch all the lectures related to finance current affairs, whether it is theory based, whether it is MCQ based, whether it is compilation based, right? But if you are not getting enough time or you are studying some other subject, then I will prefer you watch the weekly session plus the compilation session, right? That will also be fine. Okay guys, next one is a very small update. L&T Finance, which is quite active in the space of sustainability, right? In 2025 as well, this organization was, I will say, very active in terms of sustainability, in terms of ESG, and they have launched one ESG related bond as well. So that is your homework for today, that you have to study about L&T Green Bond. You have to study about L&T Green Bond. So after my session, just type on Google L&T Green Bond stuff, right? So now you all know that L&T Finance, it is one of the India's leading NBFC, and they have now become a signatory to the United Nations Global Compact. Sir, what do you mean by signatory? Look, now this organization has to follow the rules and regulations of UNGC as well, which is the world's largest corporate sustainability initiative. So again, this organization is committed to ESG, environmental social governance, and we can see that from year 2025, this organization is aggressively working on the ESG stuff, right? Next one, RBI cuts the microfinance asset norms for NBFC MFIs to 60%. So this is microfinance institution NBFCs. So certain NBFCs we are having which are called as microfinance institution. Earlier they used to have a requirement that they need to maintain 75% of their total asset as microfinance loan. So my total asset ka 75% I have to invest in microfinance loans. Now I just have to invest 60% of it. Now I just have to invest 60% of it. This is the new update, right? Now this will give me greater flexibility. Why? Because the rest of the 40% I can lend in other areas as well. I can diversify my portfolio. Otherwise, earlier I just have to invest the rest of the 25% in other categories. But now I have more space. I have 40% in the other category. Only 60% I have to lend in the microfinance loans. Right? Just a quick update. Next one, government announces 20,000 crore credit guarantee schemes for microfinance institution. So if you are a microfinance institution, that's a good thing because government has recently announced 20,000 crore credit guarantee scheme. Now sir, what is this credit guarantee scheme? Look, ultimately you are an NBFC. You are in an NBFC. You can't take deposits. You can't take deposits, right? Ultimately, you have to rely on bank borrowings. You have to borrow from bank, and that's what we can see in any report. If you read any report related to trend and progress in banking or any other financial stability report, or pick any report, you will always find that how the NBFCs are sourcing funds. The major source is bank borrowings. The major source is bank borrowings, right? Because if they are not getting money, how they can lend money, right? So when they are getting bank borrowing, they have to give some guarantee. They have to give some guarantee. So government, just to promote this particular sector, government has announced 20,000 crore guarantee fund, credit guarantee scheme for MFI, right? For the MFI. So this guarantee scheme is for the microfinance institution. Now they can definitely get loans easier, I will say, from banks and other financial institution, and this will restore the bank's confidence. Why? Because government is guaranteeing the advance. Government is guaranteeing the advance, so bank is not having any problem to lend more and more money to the MFIs. Why? Because government wants to promote more microfinance institution, and government actually wants credit to flow to the small ticket size loans, to the low income and financially excluded borrowers. In this area also work is pending, and that's why we want to flow the credit in this particular area as well, right? You want the credit to reach this particular area as well. Next is just a quick update. I'll be just covering the major pointers from this particular update. Corporate Law Amendment Bill 2026 introduced to reform Companies Act and LLP. So can you guys just tell me, as of now we are having Companies Act, we have LLP Act. What is the year of Companies Act and what is the year of LLP Act? Anyone? What is the year of Companies Act? What is the year of LLP Act? Quickly guys, in the comment section. One or two answers won't work. Everybody has to answer it. Yes, very good. Companies Act 2013. Companies Act 2013. LLP Act 2008. Now these Baba Adam ke zamane ke act, we have to update them frequently. We have to update them frequently, right? So here we are with the Corporate Law Amendment Bill that will definitely going to reform the Companies Act as well as the LLP Act, right? So the Finance Minister has recently introduced this bill and soon it will be in effect also. And now this particular bill is going to promote CSR compliance, buyback related compliance, audit requirements and NEFRA requirements. So I'll be just covering it in a crisp manner. Why? Because it is just introduced as of now. It is not finalized, but still you need to know the core updates. Of it. Okay. So let's quickly discuss about the major pointers. I personally feel that this particular update is going to be super important. No doubt this is not there in your course. It is there in SEBI and PFRDA course, but they can ask you this question and then you will say, sir, it is an out of course question. No, this was a part of finance current affairs, right? Nothing is out of course in RBI. Everything is in the course. Why? Because we are having finance current affairs. We have general affairs, right? General awareness and rest of the stuff. Changes in share buyback. If a company is buying back its own share, if Reliance Industry is buying back its own share, so for those who have learned company law or maybe commerce and accountancy from me in SEBI course or PFRDA course or any other course, definitely you know, as per the rules, as per the Companies Act 2013, you can only conduct one buyback in a year. Right? This is the current provision. Only one buyback as of now, right? But as per this amendment bill, you will be allowed to conduct 2 share buybacks. And as of now, you need to have a 1 year gap between the buyback. Now, even a 6 month gap will be fine. So the new rule is going to be 2 buybacks, 6 month. Buyback number 1, buyback number 2. This is going to be the new rule. Sir, what is the old rule then? Who cares about the old rule still? The old rule is you can just have 1 buyback. You can just have 1 buyback. This is the old rule. The new rule is going to be you can have 2 buybacks. You can have 2 buybacks. Right? The most important news is related to buyback. Next one, not so important, but let's quickly cover it. Relaxation in the fast track merger when you are merging the company. When you are merging the company. Say for example, Yastika and Pallavi, they both have decided to merge the company. They both have decided to merge the company, right? Satyarth and Bhakti, they have decided to merge the company, right? They are forming a merged entity. They are merging the business. So for that, a fast track merger process can be there. So this bill definitely is going to simplify the merger process, and it is required that for the fast track merger, at least 75% of the shareholders in both the acquisition company and in the target company are satisfied. Sir, what do you mean by acquisition company? What do you mean by target company? Look, for example, Yastika is acquiring Pallavi's company, for example, right? Yastika is acquiring Pallavi's company. So Pallavi here is the target company, right? Yastika here is the acquiring company. So both the shareholders, both the company's shareholder should give the consent related to this particular arrangement up to 75%. Up to 75%, right? Sir, in buyback rule, what percentage of share companies can buy back? Acha, can anybody tell me what percentage of shareholdings we can buy back in one particular year? Any idea, anyone? That's not part of the RBI course, but definitely as a part of general understanding, you can definitely read this one. 25%. 25% is the answer. Okay. 25% is the answer. 25% is the answer. Okay. Subhashish. Okay, guys. Acha, next one can be important, is related to CSR compliance, corporate social responsibility. Now, if I am operating a company and if I am crossing a particular threshold, this is the threshold. You need to know this threshold. You need to know this threshold. This threshold is given in a section in Companies Act 2013, right? If your net worth is more than 500 crore, if your turnover is more than 1000 crore, or your net profit is more than 5 crore, then in that case you need to contribute towards a good cause, right? At least 2% of your average net profit you have to contribute, right? As per the CSR, in the CSR activity, in the corporate social responsibility, because my responsibility is not just to make profit. I have to contribute towards society as well, right? But as of now, in this particular amendment bill, they are considering to increase the profit threshold to 10 crore. As of now, it is how much? 5 crore. Acha, this is just a introduction of the bill, right? This is not the final approval of the bill. So as of now, this is just a proposal. This is just a proposal, but by the time your exam comes, who knows, it will be final. Who knows, it will be final, or maybe they ask you this particular question, like what is the proposal, right? They can ask this particular question as well. Even if it is not final, they can definitely ask, right? So there is only one trend in RBI, that there is no trend. So we have to prepare for the worst so that we can enjoy the best, right? So this is the criteria here. Plus, companies having CSR obligation of 1 crore or more let's suppose I'm just having a CSR obligation of 1 crore, then they may not be required to form a separate CSR committee. Maybe no separate CSR committee is required as a part of relaxation, right? So these updates are there. This net profit update can be definitely important for your examination, so you need to know this. Next news, public sector banks plan digital portal. They are planning a digital portal for what? To verify the paper-based bank guarantees. So if there is a bank guarantee, right? If there is a bank guarantee which is paper-based, already there are so many cases of frauds in the public sector banks, right? Public sector banks are full of cases of fraud, right? Nowadays, even private sector banks, they don't care about ESG. They don't understand G in the ESG. What is G? G for governance, right? You can see the HDFC bank case as well. You can see IndusInd bank case. You can see PNB bank. N number of examples are there. BOB bank, IDFC bank. Especially especially public sector banks are full of cases related to frauds and error. So that's why if something is paper based, we have to verify the same, and that's why they are planning to launch a digital portal to verify the paper based guarantee. Why? Because these kind of bank guarantees have cases of tampering with the paper, right? Creating some duplicate papers and so on, and that's why they want to eliminate the error and fraud risk. So centralized digital portal will soon be there to verify the paper based bank guarantees, and this platform is expected to build through the PSB Alliance in collaboration with the National E-Governance Service Limited. Please do remember this stuff. The whole idea is to reduce fraud, improve transparency. Let's see how much transparency gets improved and how many frauds are controlled, right? Because bank guarantee, that too in paper based form, is a major issue here. Why? Because I told you that tampering with the documents is there, or issuing fake guarantee or fake documents is a big problem in India, right? Is a big problem in India as of now. Acha guys, next one is NHAI backed Raajmarg Infrastructure Investment Trust. Now this trust came into existence, I think back in 2025 we have done this particular news, right? For those who are following my sessions from last 1 year or 1.5 years, you must have heard about this organization, Raajmarg Infrastructure Investment Trust. This is a kind of infrastructure investment trust, right? This is a kind of infrastructure investment trust, and this particular organization is actually sponsored by NHAI. This organization is actually sponsored by none other than NHAI. So I can say that it is enabling investors to invest in the operational highway assets, right, and earn returns from the toll revenue and so on. That's what an infrastructure investment company is doing. So this is not REITs, this is RIIT. This is the short form of an organization, name of the organization, right? Raajmarg Infrastructure Investment Trust, right? Devansh, it is a group of entity, okay, not an independent entity. It is a group. I am saying that the group of PSBs basically, right? Collectively the PSBs only. So guys, this particular entity has launched to boost the highway financing. So Union Minister for Road Transport and Highways, Mr. Nitin Gadkari, has launched NHAI sponsored Raajmarg Infrastructure Investment Trust, which was listed on Bombay Stock Exchange, right? It is also listed on Bombay Stock Exchange, and it has now started the business, initiated, and the whole initiative is to mobilize the investments in India, highway projects, right? Highway projects. So this has launched to boost the highway financing, and this can be definitely important, but I personally feel that this can come in your, this name of the organization can come in your phase 1 rather than phase 2. It's more related to general awareness stuff, right? Not directly related to your finance, but more related to finance current affairs. So it is a kind of news which can come in your phase 1 examination rather than phase 2. Acha guys, I was about to teach you the concept of REITs and INVITs as well, but we have already, it's already 7, so let's close the session right now. I'll be covering it in some other session, no worries at all. In the next session, right, whenever some जब भी फाइनेंस करंट अफेयर्स आपके थोड़े कम होंगे, डेफिनेटली आई विल बी टेकिंग द कॉन्सेप्ट ऑफ रीट्स एंड INVIT in my next upcoming session, right? So thank you so much guys for today. Thank you so much for watching the video and thank you so much for participating. See you soon in some other video. Keep on revising, keep on learning. I hope you are enjoying the sessions. Thank you so much. Bye bye. Take care. Have a great evening. See you soon in the next lecture. Thank you so much Bhakti. Thank you. Thank you everyone. Thank you. See you soon guys. Thank you Satyarth.